Welcome, and thank you for joining us for the next installment of our webinar series. I'm Amy Dickerson, a partner at Franczek in our Education Practice Group, and I'm joined today by my partner Scott Metcalf, who will take us through our discussion today on property tax frequently asked questions. For those of you who are not familiar with Franczek, we are a law firm of approximately 40 attorneys who focus on labor and employment, education, and immigration law. Before we get started, there are just a few housekeeping items I'd like to address. First, right under the presentation slides, you have the ability to type and submit questions. Please feel free to ask questions throughout the program by using this feature. Everyone logged into today's program will receive an email that includes a link to the recording of the webinar as well as the presentation. With that, we'll go ahead and get started, and I will turn it over to Scott.
Good morning, everyone. As Amy said, my name is Scott Metcalf. I'm a partner here at Franczek. I've been with the firm for about 10 years, and during that time I've been working on property tax issues, but I've spent about 20 years actually working in the field of property taxes. Before I went to law school, I worked at a nonprofit organization that focused on government finance, and as part of that, I modeled the Cook County property tax system to determine the economic impact on school districts of some proposed changes to the Cook County classification ordinance. So during that process, I learned a lot about some of the more nuanced parts of the property tax system. Today, for our agenda, we're going to try to do a high-level overview that will not only provide the basics of the property tax system for those who are unfamiliar with it, but also a few reminders and maybe even some new things for those among us who are more expert in the property tax field. So we're going to cover, first of all, the assessment process, and that's the process of valuing real estate for tax purposes. We're going to transition into budgets, which is the spending plan that justifies the property tax levy that every school district adopts and that forms the vast majority of most school districts' revenues that they have. We're also going to look at the levy process. That's a quick way to explain the levy process is that it's the amount of taxes that a governing body asks the property taxpayers to pay. Then we're going to look at the extension process. And this is different from the levy process in that the extension is the amount of money from the levy that can be legally collected. And so that's where we get into things like rate limits and tax caps and other limitations on the amount of money that school districts can collect. Then we'll transition into collections, and this is the process by which the county treasurer collects the money and distributes the money to the school districts. And then finally, we'll look at refunds. And refunds are why the school district doesn't get the full amount of its extension. There are any number of reasons why a school district will receive less than what they actually thought they were going to get. So we'll start with the very first concept, which is the assessment process. The thing to keep in mind about property tax assessments is that a property tax is an ad valorem tax. And an ad valorem tax is just a fancy Latin legal word for a tax in proportion to the value of something. So that means that the amount of the tax that is paid is directly proportional to the value of the property. In other words, the more valuable the property, the larger the tax bill compared to other properties. Now, the reason for this very cute picture on this slide is that this was a very progressive tax concept in the 11th century. There's some debate about whether it's still a progressive concept, but this is supposedly a picture of William the Conqueror. And William the Conqueror is often credited with instituting the first tax assessment in England in 1086. And what he did was he went around the country and compiled an inventory of all the property and its value for the purposes of taxing it. That was known as the Doomsday Book. And I think a lot of people still feel like tax day is doomsday in a lot of regards. But, the same principles that led William the Conqueror to value all the property in England still holds true today. Every piece of property, every piece of real estate in the state of Illinois is given what's known as a PIN. And you will probably hear this term quite a bit if you are dealing with property taxes. PIN stands for Permanent Index Number, or property index number. And this is a numbering system that is used to identify each piece of property in the state. And just for example, in Cook County, there are 1.8 million PINs, or 1.8 million distinct pieces of property that are subject to taxation. And each one of those 1.8 million PINs in Cook County and each PIN in every other county in the state of Illinois has to be assigned a value for tax purposes. The problem with that is that value is often in the eye of the beholder. And so we could have disagreements on the value of a piece of property at any given point in time. I might think it was worth more, and you might think it was worth less. And so there are three approaches to value that most appraisers recognize and most assessors will recognize as well. The first approach to value is the cost approach. And this is the depreciated cost to completely reconstruct an identical building. And by depreciated, I mean that they take the current cost and then depreciate it for the number of years that the property has been around. Then there's the sales comparison approach. And this approach takes the sale prices of similar pieces of property and adjusts them for any differences to arrive at an estimate of value for the subject property. And then there's the income approach. And this is the capitalized annual income from similar or the same properties. And this is primarily used for commercial office buildings and other income-generating properties that are held for the purposes of profiting the owner. Now, you can't do an appraisal on every single piece of real estate every year to determine its value. So what's happened is that over time there have been what's known as mass appraisal techniques. And the mass appraisal technique is most vividly illustrated through the Cook County Assessor's Office. What the Cook County Assessor's Office and every other assessor's office in the state does is that they collect all the real estate transaction data. So every time a piece of property sells within the county, there's something called a green sheet that then the assessor looks at for identification of the property, its characteristics, and most importantly, its sales price. That sales price has been placed into what's known as a regression analysis. It's a statistical formula whereby a number of different property characteristics are analyzed in order to determine the value of a particular type of property. So what they will look at are factors like the location of the property, the age of the property, the square footage of the property, the building materials that were used, and any amenities. So if your house has an attached garage rather than a detached garage, that would be a factor that the assessor will take into consideration. They run it through the formula, and then they come up with an assessed value for the property. This process in Cook County is handled in one singular office, the Cook County Assessor's Office. And then whatever results the assessor comes up with, you can appeal to the Cook County Board of Review. In every other county in Illinois, it's different. In every other county in Illinois, what you are dealing with are township assessors, and each township within the county has its own assessor's office. They then are under the control or supervision of a county-wide supervisor of assessments. And once those assessments are compiled, then you can appeal it to the County Board of Review as well. But it's a slightly different system than in Cook County. So let's look at how the assessment process works. We'll have to identify a couple of key concepts. The first key concept is the fair market value of a property, or fair cash value, which is actually defined in the property tax code. And the legal definition for a fair market value or fair cash value is the amount for which a property can be sold in the due course of business and trade, not under duress, between a willing buyer and a willing seller. That, in other words, is an arm's length transaction. An arm's length transaction, like PIN, is another phrase that you'll probably hear thrown around if you're dealing with property tax issues. The next concept is level of assessment. Level of assessment is simply the percentage of the fair market value that is subject to tax. It might be 100% in some jurisdictions, In every county in Illinois except Cook County, it's 33 1/3% of the fair market value. And in Cook County, which classifies real estate for purposes of taxation, it's either 10% or 25%. And we'll talk a little bit more about that in a few minutes. Then you have the assessed value. And the assessed value is simply the result of multiplying the fair market value by the level of assessment. Finally, we've got equalized assessed value. Equalized assessed value can often be a little bit tricky, especially in Cook County. The EAV is the assessed value multiplied by an equalization factor that's issued by the Illinois Department of Revenue. You may ask, why does the Illinois Department of Revenue have to do this? The intent behind the equalization factor is to make sure that no matter what county the property is located in, the total equalized assessed value of all property combined equals 33 1/3% of the fair market value. So the Illinois Department of Revenue conducts its own analysis of the sale prices of properties and then says, we have to add this factor on top of the assessment to make sure that everything comes out to be 33 1/3% of its fair market value. In every county except Cook County, that equalization factor, or multiplier as it's sometimes called, is almost always 1, because they're already at 33 1/3% of fair market value. In Cook County, it ranges, and it's ranged between 2 and 3.5% over time, and that is a result of both assessment practices and just the fact that we have a classification system. Now, let's walk through these examples of classification on the left-hand side of the screen. Note that in Cook County, a residential property with a fair market value of $300,000 has an assessment level of 10%. So the assessed value is $33,000 or $30,000, and the EAV based on the current multiplier is $88,881. Now, if you had a commercial property, and the only difference between the two properties was that one was commercial and the other was residential, same fair market value of $300,000, the level of assessment is 25%. So the AV is $75,000, and the EAV is $222,000. So if you're dealing with a tax that's in proportion to value, you have two properties that are valued the same, but the commercial property is going to have a higher tax burden than the residential property because of the level of assessment and the equalization. In the rest of Illinois, if you had a $300,000 property, no matter what the use of the property is, it's going to be assessed at 33 1/3% of value, and so its AV and its EAV are both going to be $99,900. Now, the reason to go through all of this and to keep it in mind as we go forward is that these assessments are also, and the EAV itself are what is known as the tax base. And the larger the tax base, the more money that can be generated for a school district with a lower tax rate. The next concept we're going to jump into quickly here is the budget. Every school district has to adopt a budget within the first quarter of the fiscal year, and the budget has to itemize all the various sources of revenue and all the various expenditures by both function and category. The legal principle behind this is that there is no authority to spend unless the governing body has approved the expenditure beforehand. Now, the best way to think about this is all these cases of the federal government and the threatened shutdown of the federal government. Why is the federal government perhaps going to shut down? It's because they're not passing appropriation ordinances. They're not authorizing the expenditure of money, and so no money can be spent. The same legal principle holds true for school districts. But there's also a provision that says that the school district's budget must be filed with the county clerk. In fact, the property tax code says that if the governing authority fails to file the required documents, meaning the budget, the county clerk shall have the authority, after giving timely notice of the failure to the taxing district, to refuse to extend the property tax levy until the documents are so filed. So if you don't adopt a budget, or if you don't file it with the county clerk within 30 days after it's adopted, the county clerk has the right to refuse to extend your property tax levy, and there would be a serious impact on your budget. The legal the legal theory behind this is that the property tax is the tax of last resort. In litigation going back over 150 years, property taxes, people have been challenging their property taxes for being too high. And in the older decisions around the turn of the century, the last part of the 1800s and the early part of the 1900s, there were decisions issued that are still good law that define the process of extending a property tax and defining the property tax as a tax of last resort. In other words, the courts have said you have to estimate all your revenues, including your fund balances, and all of your expenditures. And then you combine those two together, and whatever the difference is between what you have and what you need is all that your property tax should be for that year. Now, that legal principle doesn't necessarily account for the realities of modern school districts, and you can debate whether or not that's the appropriate framework in which to be viewing budgets today. But since those are still good law, we have to deal with them in the school district context. We'll get around to fund balances in a few minutes as well, because that is an important component of some tax rate objections that we'll be discussing later on. Now, once you have the budget in place, you have to adopt a property tax levy. Now, this image that we have on this slide is a very good indication of what the levy is going to look like. There are different statutory provisions within the school code that authorize levying for specific purposes. And when we talk about a property tax levy, what we're really talking about are levies for individual purposes that a school district has. So in this image, you'll see a line item for the educational fund levy. That is your general corporate fund of the school district. You can pay for anything you want out of that, teacher salaries, whiteboards, whatever you need to pay for. Operations and maintenance is a specific fund, and that is for money that is to be dedicated for the payment of janitorial salaries, janitorial supplies, maybe your HVAC system, but it's all those sort of things that have to go into maintaining the buildings and the grounds of a school. You have a specific authorization to levy funds for transportation purposes. You also have a specific authorization to levy taxes for the working cash fund. And a working cash fund is basically your rainy day or savings account. So if you ever run out of money, the working cash fund can loan money to other funds to keep the school district afloat until more money comes in. If you're interested in looking at all of these specific grants of authority, just take a brief tour through Article 7 of the school code, and you'll see all the different provisions that are granting the levy authority. But when we get to the levy, the most important thing to keep in mind is the Truth in Taxation Act. The Truth in Taxation Act requires the school district and any governing body that's subject to it to estimate the amount of money that's going to be needed from property taxes 20 days prior to adoption of the levy. And if the levy is going to be more than 105% of the prior year extension, you must hold a Truth in Taxation hearing. That notice for the hearing has to be published in a newspaper not more than 14 days nor less than 17 days before the hearing. Once the levy is adopted, it has to be filed with the county clerk in order to be extended. So there's a provision in both the school code and the property tax code that says by the last Tuesday in December, the property tax levy has to be filed with the county clerk's office. Now, sometimes school districts may forget to file the property tax levy by the last Tuesday in December. And so there's actually another provision. And I hesitate almost to tell you about this, but Section 17-11B of the school code provides that a failure by the school board to file the certificate with the county clerk in the time required shall not vitiate the assessment. So in other words, there were court cases around 1900 where school districts were denied the ability to extend any property tax because they failed to file their levy by the last Tuesday in December. So the General Assembly went in and provided this provision that said you can still extend the levy even if you file it late. But I think you would still end up with a rate objection or a legal complaint filed against you for filing late, and there's no protection if you adopt your budget, your levy after the last Tuesday in December. Now we'll quickly run through extensions. Extensions are the process for actually applying the rate limits and tax caps to your levy. So you can levy any amount of money that you want, but there are laws on the books that prevent you from getting all the money that you ask for. We're first going to look at loss and cost of collection, rate limits, and then PTEL or tax caps. Loss and cost of collections is based on a provision in the property tax code that says that the clerk has to extend a tax rate that is sufficient to generate the amount of money that's been levied. Well, you can never collect 100% of what you levy, and so the clerk's office, especially in Cook County, applies what's known as a loss and cost factor. So in this particular instance, the levy was $137 million, but because historically collections have only been about 97%, they've added 3% onto that. So the total levy has been increased to $141 million. And that is, in a nutshell, what the loss and cost factor is. You're going to get a little bit more. The pro of this, the benefit of this, is that it helps to make sure that you get every bit of money that you're entitled to. But the con of it is that you're probably going to get a tax rate objection as a result of it. The next thing that happens is the clerk applies the tax rate limits, or the maximum tax rate for an individual fund. And in the school code, Article 17, each grant of authority to levy a tax for a specific purpose also contains a limit on the tax rate. And before tax caps came into place, before the mid-1990s, this was the only real limitation on the taxing authorities of school districts. And what it did was it limited the amount of money that a school district could generate by limiting the tax rate. And so the tax rate limit for the educational fund up until last year was 3.5%. But I'm going to quickly click ahead to the next tax rate extension sheet for this particular district for the current year. And what you'll see is that the tax rate limit is gone. And that is a result of the education-based funding, or the evidence-based funding legislation. The education funding reform legislation that was passed last year eliminated the tax rate limit in the education fund, which has been a great benefit to school districts because now they can levy as much as they want in that fund, subject only to the tax cap. So the next step is to apply PTEL or the tax cap to the levy. And the first step in this process is to calculate what's known as a limiting rate. So you basically just take the aggregate extension from last year, multiply it by CPI, and then divide it by the current year EAV less any new property, annexations, recovered TIF value, or expired incentives. And that gives you what's known as the limiting rate. The clerk then takes that limiting rate and adds up all the different tax rates for all the different funds that are subject to PTEL. And if the combined tax rates of all those individual funds are greater than the limiting rate, a reduction has to occur. And the thing to remember about the reduction is that it can either be done proportionally among all the different funds, or it can be done entirely within a single fund. But it's up to you to decide which one it is, and you need to communicate, especially with the Cook County Clerk's office, in order to make sure that they know how you want that done. A couple of frequently asked questions about PTEL. First is the new rate referenda. So under PTEL, if you've never levied in a specific fund before, you have to go to referendum to get citizen approval to levy in that fund. Now the same applies if you have levied in a fund in the past, but just haven't levied for the past 3 years. So let's say that you have levied in your transportation fund back in the 1990s, but for the past 10 years, you haven't levied anything in your transportation fund. The question we often get presented with is, do we have to go to referendum? The answer is most likely yes, And the reason for that is because the new rate referendum provision applies to any fund that hasn't been levied in for 3 years that is subject to a backdoor referendum provision. The funds that are subject to a backdoor referendum provision are your Ed Fund, your O&M Fund, and your Transportation Fund. And so in all likelihood, you would have to get referendum approval to levy again in those funds. But in other funds, maybe not, if they are not subject to a referendum, backdoor referendum provision. The next question that we get quite a bit is, can we reduce our property tax levy? And you can, but you are foregoing certain increases in your levy. There's a provision in PTEL that allows the county clerk to extend or to calculate your limiting rate based on the highest levy for the past 3 years. And so you can go back and recapture some of the lost money from a reduction in your property tax levy, but what you're giving up over time, even with that, is the incremental growth in your levy. And the last question that we get quite a bit is, which CPI is it that is used? And the answer is that it is the Consumer Price Index for all urban consumers for all items published by the United States Department of Labor. And the reason why we get that question is that they want to use the same language from PTEL in their labor contracts because they want to continue to maintain an increase in their labor contracts that's consistent with whatever PTEL increase they're going to be allowed. And why, the last question that we get is, why is this particular CPI used? There's different measurements of Consumer Price Index which might actually be more relevant to a school district. But the reason that we've heard is that that the protection that PTEL provides is to the homeowner, and it's not concerned with the price increases that a school district may be facing. So because it's a protection of the taxpayer, it's more relevant to look at what the CPI is for the homeowners themselves. Collections are fairly straightforward. The county treasurer will send the bills in 2 installments over the course of the year, one in the spring and one in the fall. The treasurer then collects and distributes the payments and conducts tax foreclosure actions to make sure that if someone doesn't pay their property taxes, that the tax lien is enforced. Finally, we have the refunds, and the refunds are the result of post-extension legal actions, and whatever success these post-extension legal actions have will reduce the distributions that the treasurer's office gives out to the school districts. And the sources of those reductions and refunds are either property tax appeal board cases, which are filed at an administrative agency, or at tax objection complaints, which are filed in circuit court. And tax objection complaints can either be based on the value of a property, or they can be filed based on the actions of a school district leading to the tax rate that was calculated. And finally, you have certificates of error. And certificates of error are basically administrative mea culpas by the assessing officials saying that they got it wrong in the first place. And you'll see these primarily in relationship to homeowners who have failed to file the necessary paperwork to get their homeowner exemptions. And we've seen a dramatic increase in the number of certificates of error that have been granted, especially in relation to senior citizen exemptions, which has resulted in large refunds for some of our school district clients.
Scott, before we close, if we have time for one question, one's come in regarding the issue of more and more taxpayers going directly to the courts to appeal their taxes rather than through the appeal process. So how do districts even find out about these appeals, and should districts intervene in this type of situation?
Yes, so the way that school districts can find out about cases that have been filed in circuit court is by doing the research themselves. Unlike the other legal actions, if a tax objection complaint is filed in Cook County Circuit Court, there's a provision in the property tax code that specifically denies the ability to send notice to school districts. So even though the school districts will end up refunding money at the end of the day because of these cases, they are not entitled to any notice that these cases even exist. So the only way for a school district to find out about them is to go out and do the research. Now, this is absolutely not true in every other county in Illinois. Outside of Cook County, school districts are entitled to notice. And so there would have to be some sort of change in the property tax code in order to bring Cook County in line with every other county in the state of Illinois. But whether or not you should intervene in a case once you've discovered its existence is really a cost-benefit analysis. You have to look at the amount of the potential refund and then determine if it meets the threshold at which intervention will be cost effective, because you have to keep in mind that while intervening in these cases at PTAB is free, there are filing fee costs and court appearance costs in circuit court that can make it less cost beneficial to intervene in the smaller dollar amount cases.
Great. Well, thank you, Scott, and thank you so much for all this valuable information today, and thank you to everyone listening for joining us today. We hope you found today's program helpful. In the next webinar in our series, we will be providing a year-end update where we will be discussing some current events and hot topics in school law, including what to expect from the Governor-elect's education agenda, the latest on the recently proposed Title IX regulations, as well as the recent vote by the members of the Illinois Association of School Boards on the issue of allowing districts to train school staff to carry guns in school. We hope you will join us then on December 10th at 10 a.m. for that webinar. You will receive an email today with a link to today's program recording and presentation, as well as a link to register for our upcoming webinar. Thank you again and have a great afternoon.